This episode of the What the FinTech podcast is sponsored by TransUnion. As the BNPL market continues to grow, lenders need a trusted partner to navigate this evolving landscape. TransUnion is at the forefront of helping lenders prepare to integrate BNPL data into their underwriting strategies. As this data becomes available, TransUnion will provide the insights, best practices, and tools necessary to leverage BNPL data effectively. By partnering with TransUnion, you can enable your company to stay one step ahead in the BNPL revolution and ensure your lending strategies are future ready. Visit www.transunion.com/FinTech Futures to learn more. Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor at FinTech Futures, and for this episode we're joined by Liz Pagel, Senior Vice President and Consumer Lending Business Leader at TransUnion. Liz, welcome to the show.
Thank you for having me.
Excellent. It's great to have you here. And just to get started, we'd like to quickly let us know a bit more about yourself then and TransUnion.
So I run the consumer lending business at TransUnion, which means I run the P&L for all the work that we do with fintechs, buy now, pay later lenders, anybody that's doing unsecured installment type products, and then anything new that comes to market. So I took over this role in 2015 and I started on this team in 2015. And at that point, there was no buy now, pay later. And there have been several innovations in fintech since then. So I really get to figure out how TransUnion interacts with all of the new products that come to market.
Excellent. Sounds great. And we look forward to learning more about that as we go through the episode as well. And again, great to have you here. And thanks so much for taking the time out to speak with us today. So on the show this week, we'll be discussing the growing popularity of buy now, pay later products and their future impact on credit reporting. We'll cover the potential benefits of BNPL for new to credit customers, its growth in the market, and the role BNPL could play in financial inclusion. We'll also discuss the upcoming integration of BNPL data into credit reports, its potential effects on credit scores, and how lenders can adapt to this significant shift in the credit landscape. That's all to come shortly, but as always, we'll open with our news and numbers segments. This is where our guest has gone out and found a news story featuring an interesting number to discuss and get us started. So, Liz, what have you brought along for us today?
Great. Oh, it's a little bit of a stretch. It's not necessarily a news story, but Klarna a few months ago published a wiki with a little bit of information about its business. They wanted to have a more open relationship with consumers and the markets to kind of share more of their business. And one of the details that they shared is that only 4% of Klarna payments in the US are late overall. And that's a really low number. I think it helps change the perspective a little bit of the consumer on this buy now, pay later product. So a lot of people are worried about this product. There's a lot of buzz in the press about consumers getting overextended. And there have been some misleading polls that have been out there talking about how many consumers are struggling to pay these buy now, pay later loans off. So I wanted to pull some of the real numbers on delinquency. Since the credit bureaus don't have the data yet, we can't give you the definitive delinquency numbers. But if you look at that 4% from Klarna, you look at Affirm's public filings, their 60 days past due numbers about 1.5%. And just as a frame of reference, so unsecured personal loans on the credit file today are about 3.4% delinquent at 60 days past due. So like these buy now, pay later products, by and large, I mean, every lender is in kind of a different risk tier. So you'll expect a higher delinquency rate from some of the lenders versus others. But like these are low. These are sub 5% delinquency rates, which really shows that the consumer is handling these products very well compared to what some of the reputation is in the market.
Yeah, I mean, you obviously compared the numbers to the unsecured personal loans there as well. I mean, is there anything that other lenders can more widely learn from this, do you think?
The other thing that caused a lot of buzz in this market several months ago was there was a Bloomberg article about phantom debt. And as we talk in the buy now, pay later community, everyone's always referencing the phantom debt article. And it went on to say that this is invisible debt that consumers have because it's not on the credit file. And honestly, that's true. The lenders that are using TransUnion or other bureau data to underwrite cannot see at this point buy now, pay later data. Debunking that a little bit, though, like these are short-term loans. Like most of these loans are gone in 6 weeks. So while, yes, credit card lender can't see it, by the time the card's actually being used by the consumer that they've just underwritten, this thing's probably gone. So it's very short-term. The other thing that that article mentioned was that they did a Harris Poll survey of consumers, and it said that over 40% of consumers reported being late on their buy now, pay later payments. And that just blew my mind because I knew these numbers, right, from public sources and just from the interactions I have with the buy now, pay later lenders every day. I know that they're sub 5%. So I was baffled by why the poll was saying 40% were delinquent. So I decided to field my own consumer poll through TransUnion. We did a large sample of buy now, pay later users across the country. And I tried to word that question as specifically as possible to try and get a better answer on delinquency rates. So I think I said, are you at this time currently more than 30 days late on your buy now, pay later payment? This typically means you've actually missed 2 full payments on buy now, pay later. 45% of the consumers said that they were delinquent. It's just, I don't know why. I think the takeaway there is that poll data on delinquency should not be trusted. I also kind of ran a control in that poll and said, okay, on your cards and personal loans, are you currently more than 30 days past due? 45% of them said they were late on their credit card or personal loan. And even more high-income consumers said they were late. So I don't know why consumers cannot comprehend delinquency questions and polls. So I just would take that all with a grain of salt.
Sure. I mean, it's interesting. I mean, when you look at these numbers as well, I mean, what do they say to you, I guess, in terms of the evolution of BNPL in general as well, and how consumers are using it since it first started picking up popularity a few years back?
Given the sheer number of consumers using these products are a regular part of the consumer wallet. It's an incredible phenomenon that this thing didn't exist 5 years ago, barely. And now it's something that consumers are using for everyday purchases. Like my nanny uses buy now, pay later every time I buy a new device that she wants. And she goes out and buys it and she finances it. And it makes perfect sense. It helps her spread those payments over time. It's cheaper than putting on a credit card balance that she's revolving. Like it's a pretty good decision. So consumers are seeing that this is a tool, and it's a pretty effective tool to put somebody on a pretty regimented plan to pay these big purchases back.
Moving on then, I mean, who would you say are the main consumers using BNPL at the moment and driving its growth? Because it always used to be the assumption was it's mainly millennials and younger generations, but is there a wider spread across generations now?
It's certainly changed. It has penetrated every generational group. So when we survey consumers and when we look at the consumers applying for buy now, pay later loans with the lenders that do business with TransUnion, it's really across all generations. I mean, we've even got baby boomers using it at a pretty regular clip for sporadic purchases. The only the silent generation does not use this product, but everybody else is heavily or definitely dabbling in it and using it as a tool in their wallet. It's also across risk tiers. So it used to be like young consumer, more subprime. It still does skew younger and more subprime, but again, it's across all risk tiers. You've got consumers that are super prime using this for different types of purchases all the way down through subprime.
Yeah, and I mean, you've touched on it there, but what is it do you think that consumers are using these products for mainly now as well? There's a lot of talk about BNPL being used for groceries and stuff now, but is that a common use case?
Yeah, so it's available almost everywhere, right? So you're shopping online, you're checking out. I know when I'm in Instacart, it's always an option to buy now, pay later. And with grocery prices these days, you're like, interesting. But the main use cases are still electronics, clothing, and larger purchases. So that's the primary use case. There are consumers that will use it for all those other places that it's available for, but still the primary ones are those larger purchases, like a vacuum, a computer, things like that.
Sure. And I mean, I guess what should consumers think about when they're considering a BNPL loan? Then when is it a good time to use one? When is it a potentially bad time to use one?
Yeah, it's a really good question. A few different options. So consumers before buy now, pay later would probably put most of these purchases on a credit card. And most of the consumers that use buy now, pay later do have a credit card and do have open to buy available on their credit card. So they're actually making a choice. They could put it on the credit card. They could put it on buy now, pay later. If you're a consumer that revolves month to month and carrying a balance on your credit card, those interest rates, especially right now, are pretty high. So if you're going to not pay it off right away that month, it's a great idea to put something on buy now, pay later. Make sure that you can make those payments because it will break up that purchase into big payments over the next 3. So they do 3 payments over 6 weeks. But as long as you can make those payments, it's a really responsible way to knock out that expense, pay it off relatively quickly. And especially with the pay in 4 product, it's almost always 0% interest. So the merchant is actually the one paying the buy now, pay later lender, and that's how they're making money. So why not let the merchant pay for you to finance it versus you paying interest rate on your credit card? Another good angle there is if you're trying to maintain and grow your credit score, we advise 30% utilization across all your credit cards, trying to keep your cards just below that 30% watermark. If you're going to make a big purchase, that could take you over that pretty quickly. So thinking about that too, it helps to have that utilization low on your credit card. So put that on a buy now, pay later, pay it off over time, and don't take that hit to your utilization. When should you not use it? If you can't make the payment. So you really have to make sure that you have enough money in the bank account or in whatever you're connecting the loan to make those payments every 2 weeks.
Excellent. Yeah. And I mean, off the back of that, then, I mean, how would you respond to potential concerns from some people that BNPL might possibly lead to excessive debt or poor credit behavior?
I mean, it's something that, like all credit, needs to be used responsibly. Now, I know it's enticing when you see $100 purchase is now only $25 every 2 weeks. That feels better just to the consumer looking at it. You just have to make sure that you're not overspending. Look at this as another tool to buy the things you would have bought anyways, or to finance something that you do need and that you can make sure that you can pay for. We have not seen a massive, the delinquency rates are low on this. That's where we started this conversation. So consumers are making the payments. They don't seem to be struggling too much. And also when we look at the consumers across, well, we can't tell because we don't have the data yet from the buy now, pay laters in at TransUnion. We can tell who's applying for these loans, and we're not seeing them perform noticeably worse on their other products. So it doesn't seem like these are causing the consumers to miss their credit card payment, miss their auto payment. That's the most important thing, is if you're using these products, make sure you're taking care of those really important things in your life, like the auto payment, the mortgage, the rent. All those things have to be paid in addition to this.
And I guess on the flip side of that, I mean, what role do you think BNPL can play in promoting financial inclusion as well?
So this is a bigger story. So this is thinking about the future. So that right now, very few buy now, pay later loans are reported to the credit bureaus. It's coming soon though. Apple Pay Later started this kind of trend several months ago before they exited the space. But they began reporting, and now many of these big lenders are on a path to reporting their data to TransUnion, Experian, Equifax to help consumers build credit. The cool thing about these products is that delinquency rates are low. So you've got a ton of positive payment information that consumers aren't getting credit for today. And that's a great way to build credit. Like, think about telling a young consumer or somebody who has a thin file or nothing on their credit file, hey, go finance that pair of sneakers or that outfit you were going to buy anyways. Finance it, make sure you can pay it off. And look, all of a sudden you've got 3 positive payments on your credit report and you can start building credit. It's a lot easier to explain that type of thing to a young consumer than saying, okay, you need to take out a secured credit card. You're going to have to give them $500. They're going to hold on to your $500. You have to spend a little bit of those products are out there, and that is how many people begin to build credit today. But this, I believe, is more accessible.
Yeah, I mean, you've touched on it there, but why has it taken so long then for BNPL data to be included in credit reports? And what changes are expected then this year?
Yeah, so I'm going to back up a little bit and define buy now, pay later, because it's a term that can be used to talk about a couple of different products. So I put this in 3 buckets. Buy now, pay later in its purest form is the pay in 4 product. You buy the thing, you pay 25% of it on the day you buy it, and then over the next 3 payments, you pay it off. Many of these lenders that are started in the pay in 4 product have extended into installment loans for the same types of things. It's still for a purchase. It's still something that a consumer might use several times a year to make large purchases, but they could be 12 months, 18 months long, and they often can have some sort of an interest rate on them. It's still kind of a good deal for the consumer because the merchant is still subsidizing that. It's in the merchant's best interest to help you finance the purchase, so they subsidize it. And those also kind of fit into this bucket of things that are not on the credit file today. Now, point of sale installment loans that are for things like home improvement, a wedding, like solar panels, those have always been on the core credit file, and they're there now. They've always been there. Nothing changes with those. But these other things that are made for a single retail purchase, they're like a square peg in a round hole trying to go into the credit report. So the problem with them is consumers use them frequently, and they're meant to use them frequently. So Klarna, Affirm, PayPal, their best customers use their product several times a year to finance the larger purchases in their lives. If I think about the major things I bought this year, I'd have a few of these loans if I finance them all with buy now, pay later. And that would be exactly what the lenders intended. And the credit score, however, would say, oh, look, this Liz took out 3 installment loans this year. She must be in dire straits. She can't handle her finances. So the credit scores of today look at installment loans, more than one, as a higher risk signal, usually because someone who does have to take out an installment loan to finance their lives is having trouble in some way. So we're going to have to change the narrative and change the way that credit scores and credit models incorporate the data to acknowledge that they're supposed to be used more transactionally. I look at them more, there's something between an installment loan and a credit card swipe. Like, it's not fully an installment loan and it's more than a credit card swipe, but it's somewhere in the middle. So all of the credit models that are out there are going to have to reconfigure to figure out what to do with these loans and how to treat them. That's why it's taken so long, because we have not had a net new credit product in anyone that's listening to this podcast career. And there's been auto, card, mortgage, installment loan, like HELOC, that's basically it. So we had to take the whole system and actually make a new category. And that required tech work, that required the 3 bureaus to get in line on what direction we wanted to handle this. We needed to put new guidance out there. And now we're in the phase of helping the buy now, pay laters stand up the reporting. They've never done that before. And that requires tech to put the file together to send over to us. It also requires having a team in place to handle disputes. So when the consumer sees his or her data and something wrong, they have to be able to call the lender and say, there's a problem here, and they have to be able to handle that. So it's taken some time to get all of that moving. Now that we've got all that, now we're in the phase where we're going to start seeing lenders start reporting, which is super exciting. You'll see some announcements this year. And the consumers will be the only ones initially that can see the data. So you'll be able to see it on your credit report. You'll be able to look at it, audit it, make sure it looks good. It will help you keep track of what you've got outstanding. But it's even then still going to take a while before we can start incorporating it into credit decisions. So again, we don't have the data yet. There's so much analytics that needs to be done on top of the data to figure out how to incorporate it into credit decisions in a way that properly reflects the risk and the opportunity of consumers paying off these loans. So that's going to take time. It'll probably take at least 6-8 months after the beginning to have lenders start using it, and more time after that before FICO and Vantage can truly incorporate it in a way that makes sense. But it's an evolution. It's the first time we've had something new, and I don't think it'll be the last time we have a new product either.
Excellent. Yeah, no, exciting times ahead. And I guess, obviously, we're at this phase now, but how do you foresee the incorporation of BNPL data into credit scores models evolving over time? What are the next steps then?
So the first thing, first, only consumers can see it. Next, lenders will be able to use it on a transactional basis. So they'll be able to, so if they're using a FICO score or a Vantage score to underwrite today, they could maybe say, hey, if this consumer's paid off 3 buy now, pay laters successfully, I'm going to bump them up to a higher loan amount or give them more access to credit. Or if the consumer has defaulted or not paid a buy now, pay later loan, maybe I give them a lower loan amount or think about declining them. So it'll still be the same world of like the delinquency is bad and making payments is good. So we'll start to see kind of around the edges some impacts from that. Until it gets into models, it won't be widespread usage across all lenders in the ecosystem. But we're going to have to figure out how it factors in to FICO Vantage. And there'll be a ton of analysis done, a ton of work. The CFPB wants to see what's going to happen. They're interested and want to make sure that this is something that is of value to the consumers, this reporting, and something that can hopefully drive financial inclusion. Just all of these positive payments, like 95, 96, 97% of the consumers paying these back, like that's really good positive data. We want to make sure it has the right impact on consumers' access to credit.
Excellent. Yeah. And I mean, you mentioned that the CFPB there, but generally what the regulator's been saying about all this change?
So we talked to the CFPB regularly on this. They agree that this could be a financial inclusion opportunity, and so they're kind of watching it. The CFPB has never weighed in on credit reporting before. It's kind of just been something that has always worked as a give to get business. And that's a kind of promise that we work with all of our lenders that use TransUnion data also furnish to TransUnion. Now, that has not been the case for buy now, pay later. Those lenders are actually using the credit data without furnishing back. And that's always been a temporary thing. We told them from the beginning that, hey, we can't figure this out yet. We don't have the right ways, but when we do have the right way to incorporate the data, clock is ticking. You've got to start reporting. So the clock's been ticking for a while, and that's why you'll start seeing some of this movement. So I think the CFPB is hopeful that this will happen organically in that way. I do see, if it doesn't happen, them potentially tipping the scale a little bit towards the reporting side to have consumers be able to benefit from this information. There's also a lot of confusion out there in the market that other regulators have come out. We had the New York State had some legislation on the docket that did not go through this summer, but that was gaining momentum to actually prohibit buy now, pay later reporting. So I think it's really incumbent on the buy now, pay laters and the credit bureaus and everybody to get the word out there that we've done the work to make sure that this data does not flow in like an installment loan and just decimate everybody's credit that's using these things frequently. That helps nobody. So if we let that happen, FICOs would go wild and they wouldn't be predictive anymore. And all of a sudden, every model out there would basically break because there's so much data here. If we didn't figure out how to handle it separately and to slowly introduce it in a way that can help consumers build credit and really monitor it. Also, if the data signal ends up being really negative or something like that, like it won't happen. The lenders won't report. So we need to figure out, it's this incredible like dance across this industry to figure out how to make this all work and make it work for consumers, make it work for the lenders, and make it work for the other lenders in the ecosystem. So we're working with anybody that's looking to legislate around this to explain to them like, hey, we've really thought this through. We know exactly how we're going to do it, and we're going to do it really carefully. And if you need us to, we'll show you the results along the way to help get you comfortable with it.
Excellent. Yeah, I mean, you've touched on it there, but I mean, what steps in particular has TransUnion been taking to ensure that the incorporation of BNPL data doesn't have any unintended negative consequences, I guess, for consumer scores?
I mean, it's all a chicken and egg thing. We need the data first, right? So in order to do all this analytics, and I'll tell you, my data science team is so excited to get their hands on this data. This is a jackpot from a data perspective. Everything else that we're working on, like we're getting rental trade lines, but it's like, okay, so one housing provider starts reporting trade lines. That's great, but there's so many. There's a long tail of landlords in this country. There's no data set just sitting there that's credit data that's as big and as concentrated. Like all we have to do is get like 5 of these lenders in, and we've got almost the whole market. So it's just a jackpot when it comes to data geeks like myself. But we don't have it yet. So we've got all these plans. We've got all of the analysis that we're going to do once we get the data in to figure out how it looks across all these different risk tiers, what the signal is, and all of these different things. We've got hypotheses to test. We've built 100 attributes already, but we'll probably build more once we get the data and understand what permutations of it make sense. We've made plans to make sure that none of the other attributes that TransUnion creates, so like on the credit data, using all the other credit data in your credit report today, there are attributes like average age of trade, total indebtedness, number of new loan applications. The buy now, pay later data is not going to touch any of those until we figure out if it should. My guess is it probably shouldn't. It should be completely separate because multiple small loans will throw many of those average or total attributes out of whack. So we'll go through probably one by one and say, hey, does it belong in here or no? And make sure we're thoughtful about it. And the whole point is the data's got to be predictive. If we throw it into anywhere and it throws everything off and in a way that's not predictive, then we're fooling with the integrity of credit scores. And that's absolutely not what we want to do. So it's going to have to be a long and careful process.
Sounds great. And I mean, I guess what future developments do you anticipate in the BNPL and point of sale lending space, and how might they impact the credit ecosystem as well?
I expect it to continue to grow. We did this consumer survey, and 89% of the consumers said they were satisfied or very satisfied with their buy now, pay later experience. I think that's a wild number. Most people don't like their financial services products that much. Many of them would recommend it to their friends, and most of them can plan to continue to use it. Even the consumers that aren't using buy now, pay later today, 40% of them said that if the data was reported and could potentially help their credit score, they'd be more likely to use the product. So I could see it becoming even more widespread. I could see it being something that is a ladder into other credit products and helps consumers kind of get more access to credit over time. And I think the lenders are going to be able to say, hey, we're a credit builder product. We can help you build your credit. They can show you your credit score and help you kind of ladder into different products. So it's a whole new angle for this product.
And how should lenders and financial institutions prepare them for the incorporation of BNPL data into credit reporting?
So if you're not a buy now, pay later lender, you have probably been calling me once a month for the past 5 years, complaining that the data is not there yet. I have these regular calls, and I don't blame them. Like, they are aware that there's debt out there and they can't see it. So we are keeping them all up to date. We'll have more information once we get more furnishers. But the first thing that we'll be doing is helping lenders use the data as an overlay onto their existing strategies. So we'll come out, or like TransUnion will come out with ideas of how to do that, best practices, case studies. So they won't have had the benefit of analyzing the data themselves. But if they want to start using it, we'll have some ideas of how to use it to give consumers more access to credit, to approve more consumers, and to find those that are perhaps struggling even to pay the buy now, pay laters off, to reconsider exactly how much credit they're granting them.
Excellent. And I mean, looking ahead to the future then, I mean, as you mentioned earlier in the show, I mean, BNPL, the first new loan product in generations. Where do you think the innovation is going to go next?
So we're already there. Like, earned wage access is growing like crazy right now. At this point, I don't think that's a credit product that needs to go on a credit report, but there'll be some other innovation. I'm looking at crypto lending. What consumers that are active in the crypto universe are borrowing in order to buy more crypto. Like, those loans are their loans. They could benefit from consumer credit. We've got a product out there that with a company called Quadrata, where you could actually put your credit score on your anonymized crypto wallet. So whoever you're interacting with, they don't know who I am, but they know my credit score and have some trust in interacting with me in the crypto ecosystem. So there's all kinds of things like that. I mean, getting credit for the borrowing you're doing in the crypto ecosystem is something that could come in the future. So there's all kinds of exciting stuff, and I just can't wait to see what's next.
Yeah, I mean, looking at the wider space as well, I mean, what are the new fintech products do you see out there right now that you're most excited by and you think have the most potential?
I'm watching earned wage access. It's an interesting product. I also serve, as part of my role, short-term lenders, or kind of the legacy payday lenders. They all kind of were worried initially that earned wage access would chip into their business of providing short-term loans. Turns out there's actually increased volumes for short-term loans. So if you're usually getting paid on Friday and you actually get paid on Wednesday, you may have actually spent the money by Friday, and then rent's due on Friday, and then all of a sudden, shoot, I got to pay rent. So it changes people's cash flows on a weekly basis for people that are tight on cash flows. So we're watching that product to see if it's a net positive, net negative, to try to understand that more. And I think buy now, pay later will continue to evolve. There's like every flavor out there now. It's the pay in 4, it's the pay in 1, it's the pay in 15, all kinds of different products. And then attaching plastic to it. Like, can you have a card? Many of the buy now, pay later lenders have different versions of cards that act somewhere in between a credit card and a plastic that sits in front of an installment loan. So a lot of cool innovation there as well.
Excellent. Yeah, and just to finish things off, I mean, if a fintech wanted to help consumers build credit, where is the best place for them to start?
Talk to TransUnion. We've been kind of leading the way in how we get this done. And we know exactly how to help them through the process now. We're talking to most of them, and it's moving forward. But we have spent hours and hours with the teams at these fintechs, the buy now, pay laters, explaining what reporting is, explaining what the filling out a Metro 2 format looks like, explaining how to use all the fields. It's honestly fun for some of our experts that have been doing this for years and years to educate a whole company that hasn't done this before on the whole process.
Thanks again, Liz, for chatting with us today. To close out the podcast, we have our now infamous FinTech jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of. Or, of course, you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
So this is very boring, but I could not let BNPL sit in your jail. I wanted to do something cooler than that, but I just couldn't get over myself if I let that sit there. So I'd like to free buy now, pay later from the jail. The argument that I think it was put in there saying it was kind of helping disguising debt as something else. I'd look at buy now, pay later more as a contrast to layaway. So many people are saying, oh, it's just the old layaway plan for shopping. And it's backwards, though. You buy it, you get it now, and then you pay it over time. In layaway, you pay it and then you get it. So I think the buy now, pay later is a great term that explains how this works. And if you think about it, every piece of credit is buy now, pay later. I mean, swipe your credit card, pay later. Buy it, get not a loan, pay it later. So it's just a clever term that I think does represent that it is credit.
Excellent. Yeah, and it's been in the jail for a while now as well. So I would agree it's time to let BNPL out of the jail now. And you've made a very convincing case across our conversation today. So if you were to sum it up briefly then, I mean, it's still quite a new product, but do you think BNPL is here to stay now for the long term?
I mean, just given the sheer number and breadth of consumers that are using buy now, pay later today and their extreme satisfaction with the product that we see from surveys and from talking to consumers, it's definitely here to stay. And it's a new tool. And I think it's a productive tool. I think it's a responsible tool in the consumer's wallet. It's a great alternative to racking up credit card debt, and it puts consumers on a really regimented payment plan that, given low delinquency rates, they're doing pretty well with.
Excellent. Yeah, well, I'm more than happy to remove BNPL from the jail then this week. And Liz, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thank you.
That's all we have time for this week. Thanks, of course, to Liz for joining me. As for FinTech Futures, you can find us online at fintechfutures.com, on X at FinTech Futures, and of course on LinkedIn. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.